Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, January 25th, and we got a little bit of news going on today, so let's go ahead and see what the economic news releases there are. We'll start with the Case-Shiller home prices. We had a drop in November. These are November numbers, negative 1.59% from previous 1% negative in October. So price is still showing downturn. Some of these cities like Las Vegas and Miami are really taking big hits from the heights. Some of them over 50% drops since their heights. But one of the things, the bright spots in the readings today is consumer confidence. Look how we had a 60.6%, much higher than the 54.8% that they had estimated, or even the 52.5% that we had back in December. So kind of a big jump there. Maybe that's due to people feeling good about maybe where things are going after the election, perhaps, or after Christmas highs or something. So we'll see. We'll keep an eye on that, but that's what's kind of helping the market a little bit today. Then we got the FHFA housing price index. So basically, we had a slight increase back in October, but November basically showed zero, so nothing there. So that really did help us out there. Technicals, the stock market's down today. We didn't have such a good treasury auction the other day. Not much appetite, so not much demand. But this is something to really watch out here. Look at the UK showing contraction in its economy for the first time since 2009. So remember, that was when the recession was officially over, at least for the US here back in June 2009. So definitely want to keep eye on that, as that could trickle to the US economy. And we are, we're in a very vulnerable spot, so we could potentially face a dip, as people talked about double dip. So this is something definitely to watch and have some concerns over. State of the Union address, it will be coming out this evening, so probably tomorrow we'll see some type of reaction to the State of the Union address. India's Reserve Bank raised their rates to cool their inflationary concerns. So as probably know, China's been growing rapidly, but so has India. So they've been right there, right behind China, and of course, because their economy is growing so rapidly, they're worrying about inflation. The Fed starts out their two-day meeting today, so that could create some volatility in the market if anything gets out. But their statements released for tomorrow. And then Japan's bank, Fed Reserve, held steady on their rates, so they decided not to raise it. They did have a slight revision to the forecast for their GDP, going from 1.8 down to 1.6, even though it's showing a slight increase, but they pulled back a little bit on it. So let's take a look here at the bond market. We started the day off about 19 basis points higher than where we left off yesterday, but since then we were down actually at one point negative 38 from that, so we were actually about 19 below where we left off yesterday. But right now we're kind of about where we are from yesterday's close. Yesterday's close. So so rates right now, depending on when the rate sheets came out with the lenders, we could be about the same. Mortgage rates could be about the same as what we had yesterday. And as you can kind of see, we're kind of hugging this upper part of this trend line. As we saw, we have a downward trend here. And right now, as you can see, it's kind of pushing the upward trend. And we could potentially have a breakthrough here the next day or so, as we get the Fed meeting tomorrow. We do get some important news going on this week. So this could be something that could help break us up. I say this because usually the bond market's usually the direct benefit from the stock market, and the stock market is reaching the psychological levels of the 12,000 on the Dow. So maybe is showing some signs that maybe it's wearing down. We're kind of getting tired now, so that we could see a correction in that market. Hence, that money movement will be moved over to the bond, so that will help improve mortgage rates. Something to kind of watch out for. All right, folks, you have a great day, and anything else major pops up, I'll be sure to update you. Take care.